I think metals are ready to move. I think metals have been kind of underpriced and under pressure, and you've started to see some of the breakout.
At the birth of our nation, our forefathers took a stand with their lives, their fortunes, and their sacred honor to establish liberty from oppressive political and financial tyranny. Now you can take a stand as well to declare your personal liberty from inflation and the banks. I'm Kaiser Johnson with Liberty and Finance, and these are the 4th of July week specials while supplies last. First, we featured 2024 American Silver Eagles at just $5.95 over spot. Next, we have 2024 Gold 1/10-ounce Eagles at $39 over melt per coin. And finally, in a Liberty and Finance exclusive, we have pre-33 AU Gold $10 Liberties at just $59 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Happy 4th of July.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz. Todd, thank you so much for joining us today.
Great to be back with you, Elijah. Always a pleasure.
Well, it's great to have you today. I did want to discuss, as we're coming off the 4th of July here, we are seeing a pop in gold. Your perspective on the recent rally we've seen in gold. Obviously, there's been a pullback, but over the last few months, we've seen quite a rally. What is your current view of the gold market?
Well, I think gold is going higher, Elijah. I mean, the pullback was natural. It was expected. We were stuck in a range and still are stuck in a range, 2,300 to 2,400. But it wouldn't surprise me if by the end of summer we're, 25, 2,600, maybe a little bit higher. I'm not going to make some crazy, ridiculous prediction that they're going to the moon, but I think that they're going to continue to go higher. And the more problems that become in this country, the higher the value on physical metals is going to be.
And as for silver, your perspective on that right now?
I think silver looks great. I think silver has got a better chance, and I think silver will narrow the gold to silver ratio. And I think that silver will outperform. By the end of the year, I think silver will outperform gold. But I think that if you're an investor or whatever, I think you should have a representation of both. I think that they are going to have some value. And in my opinion, there's a very real chance, depending on what happens in November, that you could need gold and silver as a natural currency once again.
That's a very good point. I mean, obviously, in the last week here, it's been political turmoil, especially in the Democratic Party. It seems like Trump has just been kind of waiting in the sidelines, seeing all the chaos ensue. Your perspective on that, and will that have any impact in the financial system?
Uncertainty will have some impact. We haven't seen the reaction yet because there hasn't been a lot yet, and the markets are still going higher. Remember, we have an overflooded money supply. And of course, if you recognize that about 10% of the world controls about 95% of the market, they've got plenty of dough, and they're still being able to borrow at lesser rates than others and use that money. So as long as the equities keep clicking up, it's going to show you that they're not concerned. Now, again, remember, the markets don't make an announcement and tell you that there's going to be a problem. We already recognize that there are over 600 regional banks that are expressing they have problems, which means if there's 600 expressing, there's probably 1,200 that are in trouble. And I think that the big banks are in trouble as well. I think they're once again over leveraged. And I think part of this fluff that we're seeing in the equity markets is to keep the news away from the banks. But if we go back into 2008, Paulson came on Vesa Nation in September, about 2 months before the collapse, and said everything is great. And I think once we hear that announcement again, you'll know that there's a lot of big problems. And there's been many warning signs, including, again, we had today's jobs number, which was higher than expected, but the jobs are lousy. Since 2021, 66% of the new jobs have gone to illegal immigrants, 33% to Americans, and those are Americans that have to work more than one job to make ends meet. So we've got a real problem with inflation. We've got a real problem with recession, and we've got a real problem everywhere else. So I think that, of course, I think more are leaning right. And I think that you're seeing that across the globe right now, with the exception of the UK, which went to the Labour Party.
It is interesting. I mean, especially this continued rally we saw, back in 2022, that sell off in the stock market, that major pullback. But we've seen really a rally ever since then. Do you think a lot of that could be anticipating another Trump presidency, or what do you think is the reason for why we're seeing that rally?
the rally was originally based on rate cuts. Okay, they were talking last October when this whole thing started. They said there's going to be 5 rate cut next year, which there's going to be none. And in fact, I would make the case that there's going to be a rate hike. And again, you've already got mortgage rates at 7+%. But there's no way that they can cut rates if it's legitimate unless we go into a real recession, depression type of territory where they need to do it, or the banks are once again in trouble. Which I think is going to come. But right now, if you look at the numbers tell you that there cannot be a cut. There can only be a hike, if anything.
And that seems quite concerning, at least for the financial system and the American people, because people have been really hurting under these high interest rates amid inflation as well. How do you think this higher for longer policy, and maybe even higher from here, is going to be impacting the economy?
Well, again, I have to take not issue with you, but issue with the fact that interest rates are not high. Okay. Interest rates are fairly priced, and they should be higher because the market tells you if the Federal Reserve would get out of the way and let the free market determine what rates should be higher. You look at the peer-to-peer lenders, they're 10, 12, 13, 14+% and still packed getting borrowers. Okay, people are borrowing off their credit card at 24, 25%. The interest rates are not high at all. This is only because people that are under the age of 35 never realized what rates were supposed to be. And you don't manipulate the financial system around interest rates so that you can create a phony market, which is really what we've created. The interest rates are at worst fairly priced now. And again, you look at the other lenders and we're still seeing supposedly, now again, I don't know how much I buy into the growth that we're hearing about, but even with high interest rates, we're still seeing how housing is selling. Everything is still going basically the same. Although, again, these are warning signs, but interest rates are fairly priced. But if they would just let the free market decide what they'd be, you would see the 10-year would probably be your 6 or 7%.
Now, when it comes to the banking system, I know the banking system is hurting, though, and a lot of aspects of the financial system are hurting because of these high interest rates. Can you expand on what you see happening with the banks and giving us an update there? You say even the big banks are going to be in trouble here.
Well, I think the big banks are over leveraged. Again, I think that we don't get a fair and square count. We don't get a fair and square idea of what's really going on. And I think that the big banks are over leveraged as well. You know, when we go back into COVID, when they allowed them to get off the 10-to-1 ratio, which was a joke anyways, because all they're really doing is printing money. I think that they're well over leveraged. And again, this could be compared to the Bernie Madoff Ponzi scheme, that he was fine as long as the markets kept going up because he could keep reporting BS returns. And I think the banks are the same way. As long as they keep going higher and markets keep going up, they can continue to survive. The minute these markets start to sell off, and they will sell off at some point, you're going to find out how much trouble the banks are actually in.
What will that look like, though, if we have even the big banks in trouble? We saw in 2023 last year, some regional banks fail. But if the big banks start getting in trouble, those are, it seems like, too big to fail. What is going to actually happen, and what's the government's response to that?
Well, the response will be the same as always: the garbage to screw the American taxpayer. They'll help bail out the banks once again, which is ridiculous. They should let the banks go out of business. If you want to bail out somebody, bail out the depositors, not the banks. Why would we support a business model that is bad, that allows you to make a fortune? And if you go out of business, well, we'll bail you out so you can make a fortune again. Again, the whole system is screwed up because of too much intervention, too much of the deep state, too much of things going on. And we do not allow the free market to trade to benefit everybody. As much as this administration complains about, well, the rich don't pay their taxes, blah, 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 they've cleared the way for the rich to get much richer. Okay. And they've cleared the way to destroy a middle class, because if the middle class is not in a recession, I would be totally shocked, because you can see by the number of homeless, the number of people on the street, the number of people that aren't working, and the number of jobs that have been lost.
Do you see that a Trump administration would be any different in that regard with respect to, regulation of the financial system or bailing banks out?
Well, I don't think he can just generally change it. I think, though, what we'll see with the Trump presidency is a much lower inflation gauge. I think you'll see crude oil back at $30 a barrel instead of 85. I think you'll see the cost of goods and services go down. And you also have another part that you're destroying right now, which is the farming community. because somebody's keeping their finger on the scale of these grain markets. And right now, these farmers are losing money. With every row they plant of grains, they're losing money because the input cost is so much higher, and they need their inputs to come down, which is in natural gas, which is heating oil, diesel fuel, and of course crude oil.
And a lot of people, especially in the Austrian economics philosophy, would consider the increase in the money supply to be really the first cause of inflation. Obviously, there are going to be things that cause prices to go up and down here and there. First question is, you're saying that inflation is going to probably go down. Why do you think it's going to go down? And do you buy that argument from the Austrian School of Economics that really inflation is always a monetary phenomenon?
Well, yeah, of course I buy that. Look, if Trump comes in, we're buying our oil from Saudi Arabia. Okay, we could drill our own oil. We have a 300-year supply in this country at current usage. Okay, and when Trump left office, oil was $31 a barrel. Okay, so that would immediately cut your costs. And of course, since about 80% of everything we do is correlated to oil, whether it be the cost of production of plastics or the cost of delivery, the cost of driving your car. Okay, so that brings the inflation gauge down immediately. Okay, as far as the money supply, that's more the Federal Reserve's baby, because the government does not, the Federal Reserve is the one who decides to create more money, and they're way out of their mantra and what they're supposed to be doing, because their job is supposed to be stable markets and jobs, not printing money to whenever. But of course, when you have a fiat currency system that is fraudulent and manipulated and has no backing, you can do whatever you want, because of course the dollars are more monopoly dollars right now. I mean, this Dow Jones at 40,000. When I started trading 40 years ago, the Dow Jones was 800, and you lived a hell of a lot better when the prices were down there based on what the prices were down there. But it has not stayed in a correct correlation because you've got too much federal intervention, which started with Alan Greenspan in 1980.
And then as for what the average person can do to protect themselves, regardless of how this election plays out, I think we should always, have a plan. We shouldn't be looking, for someone to save us, right? So how can we take charge ourselves and prepare for, maybe higher inflation or higher interest rates? Your perspective on that?
Well, I mean, I think if you're an investor in this equity market, you should be hedged. I mean, that's number one. We hedge all the time. I mean, I'm 100% invested in the equity market, but I'm fully hedged. So I've got a maximum risk of about 4 or 5% if the market collapses and goes to zero. I think that you should have some gold and some silver and maybe some platinum. I mean, platinum seems to be a pretty good value right down at these levels. It's less than gold. It used to be over gold. And I think you have to be diligent about how you're investing. And of course, you should never be investing with funds you don't have. If you're leveraging your investment, then you're going to go broke. There's no way to be leveraged if you don't have the capital. So if you have to make sure, the first thing everybody should do is they have credit card debt. Before you invest, pay the credit card debt, because you're not going to make 26% return. So the first thing you do is you pay your credit card debt. The second thing you do is you start investing whatever you can afford monthly as part of your bills. You start putting that into the equity market no matter what, because the equity markets have proven an 8.5% gain year over year since the history, and 10% since 1950. So if you're going to continue to do that, but again, it has to be with dollars that you have that you can afford, that you're not going to have to sell it. The same when you buy gold and silver. You cannot buy with money you don't have, because if you're forced to sell it, when you're forced to sell it, you're not going to like the price you're going to have to sell it at and the loss you're going to have to take.
Now, with respect to precious metals, you mentioned platinum, and we just talked to our good friend Rafi Farber, and he talked about how platinum is actually at an all-time low right now compared to gold. Your perspective on where we are in the platinum market? I know it's a pretty small market, but do you think it still has a lot of upside potential?
I think that the platinum market has a tremendous upside potential. I think it's kind of disturbing, and I own a lot of platinum, and I'm not trying to talk my book here, but I think that platinum has a tremendous amount of potential upside. And I think that we just have to, again, you're seeing it being held down here for whatever reason, but it should take off. And I think you can kind of compare it to silver, and the pressure silver's been under, over the years, and the lack of overall movement, where we've only really seen gold start to go up. But certainly I would be definitely a buyer of platinum. If I'd buy $100 worth of gold, I'd buy, $50 worth of silver and $25 worth of platinum just to have it, just for the sheer potential of the explosion that it can make to the upside.
And what could be the catalysts of this explosion? Are there any like fundamentals that you see, or is it just the price ratio that you're looking at that is so out of whack right now?
I look at price, Elijah. I don't care about fundamentals. Fundamentals don't mean anything to me. The only time I worry about fundamentals is if I'm buying a stock, do I believe that company is going to be in business 10, 15, 20 years from now? When I'm playing the metals market, I'm playing A, because I may need it as a currency. I'm playing it because it has had growth year over year over years. And it's a solid investment. It's a hard asset, like buying a home, that you know that if you're holding it, its value should increase over time.
It seems like a lot of these metals right now kind of offer that an interesting. There's an interesting argument behind them because they're a hard asset, right? That will never go to zero, but they also have tremendous upside potential. I mean, if you look at the chart of platinum and see where it's been in the past compared to the other monetary metals, or compared to gold and silver, and if there were ratios go back to normal, then that's tremendous upside potential probably for platinum. Also for gold and silver, there are tremendous arguments for those as well. It seems like kind of a unique opportunity here where the real assets that have never gone to zero also have tremendous upside potential.
Listen, I'm a believer in metals. I think they should be, everybody's portfolio should hold some. I mean, platinum at one point was over 2,500. So, again, you're looking at platinum right now at 1,000. So I think, again, this is not something that is going to be, that you're going to look at and say, well, how are the earnings? How is it? We don't have enough platinum. It should be increasing in price along with palladium and other things like that. And that's what we're really watching. And again, it's not a short-term play. It's not a play that listen, when you buy metals, you're not buying them to trade them, to scalp them out. You're buying them to hold them for a long-term protection. And I am of the opinion that platinum will once again go over the gold market when we finally get it going. But again, right now, the total focus of all investing dollars basically goes into the markets right now, into the equity markets, which are totally an air balloon and a house of cards that will collapse again, as has done, in 1987, 2001, 2008, and again, the next one that comes, and many before that, going back to 1929. We continue to forget about the problems and the overvalue that we place on these. And of course, part of that is the big old grand scheme of things to help, let's let the rich and the wealthy get wealthier and continue to step on the middle class and the poor.
Now, coming full circle here, do you see, with respect to gold and silver and even possibly platinum, I know there could be differences in inflation going forward depending on how the election plays out. Do you see the election making a big impact on your forecast for metals?
No, I think metals are ready to move. I think metals have been kind of underpriced and under pressure, and you've started to see some of the breakout. I mean, if you look at silver, it really hasn't done anything for years. Okay, in big perspective. And I think that, again, this is the ever-changing evolution that we will see. And of course, that includes Bitcoin as well. Okay, because Bitcoin has now become, more recognized as another stored value of asset, and, non-regulated, non-central bank, controlled. And of course, the United States being the fourth largest holder of Bitcoin, although they fought it all the way. These are things that happen. And again, I think that having some stored assets, of hard assets that you can put in your hand, and I'm not talking about buying paper, because paper is worthless, because I don't think there's enough gold and silver in the world to cover the amount of paper that's written on it. I'm talking about going out and buying real gold and silver and putting it in your safe and being prepared, because if I'm right and there is a problem, and certainly I could see a major problem if President Biden wins the election in November, I could see a massive problem happening in this country, because there's a lot of people that are against it, and it would. I think we're on the verge of the next civil or revolutionary war here.
Well, Todd Bubba Horwitz, we really appreciate your time today. If our viewers are interested in learning more, they can go to bubbatrading.com. Can you share with us a little bit about that and any last thoughts you had?
No, I think just be careful. I think that, again, I wouldn't don't trade with money you don't have. And before you invest anywhere, make sure you pay off your credit card debt, because right now we have the most amount of people that limit on their credit cards than ever before in history. And you're never going to make up that 26 or 27 or 29% that you're paying on a credit card debt. Pay that off before you do any investing.
Fantastic. Well, Todd Bubba Horwitz, thank you so much for your time, and God bless.
Thanks, Elijah.
At the birth of our nation, our forefathers took a stand with their lives, their fortunes, and their sacred honor to establish liberty from oppressive political and financial tyranny. Now you can take a stand as well to declare your personal liberty from inflation and the banks. I'm Kaiser Johnson with Liberty and Finance, and these are the 4th of July week specials while supplies last. First, we featured 2024 American Silver Eagles at just $5.95 over spot. Next, we have 2024 Gold 1/10-ounce Eagles at $39 over melt per coin. And finally, in a Liberty and Finance exclusive, we have pre-33 AU Gold $10 Liberties at just $59 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Happy 4th of July.